Hey guys, what's up? In this episode, I wanted to go over how you can get out of the market before it actually crashes. Now, this is something that anybody can do, and there are some secrets that most people don't tell you, and I have a feeling that a lot of people don't actually know about. So I wanted to share these awesome stuff with you today, so I hope you stay tuned and pay attention. All right, guys, so the market, as I said before, can only be in three different types of phases. It can be in an uptrend, it can be in a downtrend, and it can be neutral, where it's range bound. So an uptrend is where the highs and lows are getting higher. Neutral is where it's staying the same, which it roughly looks like a rectangle or straight. And then downtrend is where the lows are getting lower and the highs are getting lower as well. So down, up, neutral is type of our phase. And so to get out of the market before it crashes, what we want to do is we want to identify when the trend is going from an uptrend to a downtrend. Right here, we're going up to down. And so again, this typically does it in this fashion where it goes up, where it's forming the higher highs and higher lows. Then it starts to go neutral, and then it dips down. And so we typically see a phase where it goes in like a type of curve shape where it goes uptrend, neutral, downtrend, uptrend, neutral, downtrend, uptrend, neutral. So that's typically the process that we follow. But again, there is this index that most people don't know about. So when we're looking at the stock market, we typically look at the S&P 500 because that shows us where all, or I should say, what all the stocks are doing. So let me pull that chart up real quick. The S&P 500 or ETF SPY shows us where most of the market is going, because this tracks the top 500 stocks in the market. And so what we can see is we can see what the market is doing overall. Right now, the market is in an uptrend. And so again, the market has quick reaction time. So as you can see here back in March 2020, when it was just going up and it was trending well, and the next 2 days it dropped like 10%, 15%, and then it just went down. You can see here that it happens fast. So how do we predict this movement? All right, well, you can see here that let's just make note for later in the video that the market started to crash on February 21st, 2020. All right, now let's talk about that index that I said that most people don't know about. That is MMTH. And if you don't have access to that on your broker, go to tradingview.com. MMTH is the ticker symbol for it. And basically what this is this is the percent of stocks above the 200-day moving average. So what is the 200-day moving average? This is a very important line. So the 200-day moving average shows the last 200 days of average price. So this gray line right here on this SPY chart shows the 200-day moving average. So at this point right here, at this gray point, this is the average of the last 200 candles, or the last 200 days of price action. And so the 200-day moving average line is a very crucial line and used by a majority of the market to understand whether the market is in an uptrend or a downtrend, or whether it's going higher or going lower. When the stock is above this 200-day moving average line, that stock is said to be in an uptrend or a bull market. Now, when the stock is below this gray line, or the 200-day moving average, the stock is said to be in a downtrend or in a bear market. So that's how the 200-day moving average line is defined. So as you can see here, most of this time it's above it. When it gets into a crash section, it's below the 200-day moving average. So what is so important about MMTH, or the percent of stocks above the 200-day moving average index? This index shows the percentage of stocks above the 200-day moving average, exactly what the name says. When a vast majority of the stocks are above the 200-day moving average, we're going to see positive bull markets and great returns. When we have 50% or less below the 200-day moving average, we're going to start to see the market dip. We're going to start to see bear market trends, and that's how that works. So again, looking at this chart, MMTH can only be between two numbers. Let's just think about this here for a second. It can only be between 0 and 100. Why is that? Because this is a percent index. So we can only go as low as 0%, and we can only go as high as 100%. You can't have more than 100, and you can't have less than 0. So again, let's just start there. So we have to be at 0. Now again, what does it mean if we have 0% of the stocks above the 200-day moving average? That means every single stock this is tracking is below the 200-day moving average, which means they're all in a bear trend. What does that mean? It means we're probably in a really big crash. Now, going back to it, what does it mean if we have 100% of the stocks that is tracking above the 200-day moving average? Means MMTH is at $100. What does that mean? That means that every single stock is above the 200-day moving average, which means that we're probably in a really strong bull market. So again, how do we use this to predict a crash before it comes? Well, it's actually quite easy. All right. So like I said, here we go. If we jump back February 21st, 2020, it showed that it was really red, and we were around this 60% territory. So MMTH was around 60%. Right here at 24.20, it hit 58%, and then it went as low as 54 the next day, all the way down to 4%. So again, when we're seeing a move this huge in MMTH, that means a lot of stocks are moving from an uptrend territory into a downtrend territory over a matter of a single day. When we see that happening in a matter of a single day, that gives a very strong indication that the stock market is going to head down, because again, the stock market tracks the overall market. When the overall market is headed down, that's when the market heads down as well. And so that's what we're seeing here. So again, the best way to use this is like we also use on stocks. Put a 200-day moving average line on it. Again, if you have this trending band in an indicator, that's actually best because it shows you the best levels without false breakouts, which you can get, the first link below. But if you don't have that, just pull the 200-day moving average line, which is this gray line, for example. When it gets below it, that means we know that a crash is coming. So you can see here, crash February 24, 2020. If we head back to SPY and we look at February 24, 2020, you can see right here would have been here, and you still would have saved yourself if you would have got out when MMTH told you would have saved yourself 31% and a crash. So again, MMTH would have saved your portfolio a 30% crash, and so that's an amazing way to use an index that most people don't know about. So guys, if you don't have this already, make sure you're tracking SPY. Make sure you know how to identify trends. Again, if you need help with that, I actually put together a stock market software that shows you the exact trends, shows you what to do for each stock based on trends. That'll be in the first link below, and you can also add this indicator to your chart, so check that out for free. But you need to understand trends. You need to put on the 200-day moving average line on your chart, and you also need to keep your eye on MMTH, which is an index that tracks the percentage of stocks above the 200-day moving average. When it gets anywhere near 60-50, you're going to start to have a bit of a move to the downside. So make sure you watch that as well. That's very important. And guys, one of the importance of watching that is why in the software that I made, I have this sector analysis section, which shows you based on each sector of the market, right? There's 12 different sectors in the market, and it shows you that 11 right now are in an uptrend and 1 is neutral. So that's a very positive market. That means we're in a very green market and we're still headed in a bull trend. Now again, if we have like 5 buys and let's say 7 neutral, then we know that okay, a bear market is probably coming. If we see like 5 sells or 5 downtrends, 1 buy and the rest neutral, that means a bear market is definitely coming. So guys, that stresses the importance of watching your overall sectors, watching MMTH, and just understanding what the market is doing as a whole. Because when you look at each sector, when you look at the percentage of stocks above the 200-day moving average line, you can have a very good indication of where the market is going as a whole. All right, guys, thank you so much for listening or watching to this video / podcast, wherever you're on. If you want to get weekly info on the top stocks, on strategies that will help you make money and protect your account, make sure you smash that subscribe button. If you enjoyed this, please also smash the thumbs up button. If you want to learn more, make sure you are clicking that first link below and also smashing that subscribe button, as I mentioned, because that's how you get notified of all the amazing information that we are dropping on a weekly basis. Thank you once again for watching, and I will see you in the next episode.